Good morning guys, how are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update, so if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4 hour charts. So yeah, Bitcoin on the 4 hour, we are still below this resistance area. But just about managing to maintain above this upward sloping trend line. You could actually look at a descending wedge getting formed here. So descending wedges do on the balance of probabilities usually break to the upside. So obviously we've got that, but whilst we are below obviously this resistance and precariously close to this this support, and also have the Fed coming in this week. I mean, realistically, it's going to go the way that the Fed drives traditional markets. Crypto is going to break that same way, so it will remain to be seen what's going to happen there. I do think it's pretty obvious that that growth is slowing. I mean, if the GDP number wasn't enough of an indication to the Fed, it is quite clear that I think that inflation is going to be transitory, even though it's on a longer time frame than what the Fed is initially looking at when it was talking about transitory, and obviously it's gone up quite a lot. So they could, I think in my opinion, there is a risk to a more dovish Fed, and then obviously to an upside in risk assets. But yeah, we shall see what happens there. But realistically speaking, that is kind of what we are waiting for. Obviously the decision is on Wednesday, then obviously the press conference afterwards, and where they talk about all the fun stuff they're thinking. That will be obviously what really does give the market a bias as to what's happening going forwards. If we do look at the S&P, we just extend. Oh, don't want to do it that way. We will extend this down a little bit. You can kind of see that we broke below again, took out our recent lows, and did have a wick decently lower, and then failed our way back above the actual support area. So if we are going to have a double bottom here and continue to the upside, this is usually how double bottoms are formed. You do still take out the lows, you grab that liquidity below, and then you slam it back up, and then you don't really give the bulls the people that sold under here time to get out of the position. You continue upwards, but we have got to look at this move in the context of the wider move down that we've had, and it is obviously still relatively insignificant. We've got to be making our way up to, we'll just adjust this a little bit, we've got to be making our way up, well, basically above this, above the top side of this channel, and more importantly above 4,300 in the S&P. Above 4,300 we will start to look a lot better. Well, we'll start to look a lot better, but as you can see, it will then start to look like a head and shoulders, but that head and shoulders can then be invalidated above 4,400. So yeah, no, let's put a bullet spin on it. But like I said, we are waiting for the Fed. The 10-year obviously tapped that 3% handle. The DXY just holding up there as well. And yeah, what else can I really say? There is not much else to say. Ruble obviously looking quite good up there, basically towards recent highs for like the past few years, and gold basically wrecked. Right in the middle of where we're going. So gold is not trying to price in a more dovish Fed. So yeah, we shall have to see how this does play out. Obviously, nor is the dollar or the 10-year. But yeah, I mean, everybody is super bearish in this market, and everybody's super in the inflationary camp, and everybody is also super bullish. Good old oil. Which in my opinion has a good chance of breaking below here and then squeezing everybody to the downside, because I mean that's what markets do when everyone is one way. But nonetheless, this is horizontal we drew in the other day. Get above here, then yeah, we should see more moves to the upside, and yeah, we could potentially approach or take out this high. But it isn't going to happen unless we get some sort of escalation in conflict in Europe. It ain't going to happen unless that happens. So and then if we get a de-escalation, then just yeah, look out below. The trapdoors will be open, and that will obviously be I think that would be good for markets, obviously twofold, because obviously oil is a big input cost for anyway, and then obviously it is driving inflation, and then if we have a slowdown in the rate of change of inflation and ultimately a turnover in that to the downside in inflation, then yeah, risk assets are going to like what the Fed is then going to be able to do vis-a-vis rate hikes. So yeah, let's quickly look at stochastics now. Downward pressure from the 4 hour, so that obviously ain't ideal. 10 hour turning up here from a nice low level, so we've got the 10 hour on our side at present. 12 hour looking to turn up from a low level also, and daily is still kind of pointing down around here. By daily looking to move up from a very low level also. 3 day very low, losing a bit of its curvature. 5 day dive in, weekly has freshly turned over, and bi-weekly is not doing a lot, and obviously we know what month is doing. So there is obviously a chance, and like I said though, we are going to be driven pretty much by the Fed, but stochastics alone would indicate if we do get back above this resistance area, we've got a good chance of getting them going and at least getting us to test this 42, and then maybe we get rejected around 41, 42, and then we do then come further down. Fair enough, but it would look like we get a good chance of basically getting up here. So all we're realistically saying, if we break through this resistance, we've got a good chance of testing the next level, and then yeah, ultimately if we break through that, then we are looking, would be looking very good then for a move towards at least 46, 47,000. So that is about it. Big obviously week. We've got to kind of hear what the Fed is thinking. I suspect they are seeing the soft underbelly of this global economy, and are going to realise markets are very precariously placed, and yeah, we shall see what they do. We shall see what they do. Also, don't forget the fact that obviously bond rates have bond yields have rallied a lot. Bonds have sold off a lot already, i.e. done the Fed's work for them. Everybody is paying a higher level interest rate within the market, regardless of like the Fed actually moving the actual base rate. So yeah, so just bear in mind that the Fed's work has potentially been done already by the market. So there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.